Sorry guys, I don't know why my trading view keeps saying that it's detecting an ad blocker. I don't even know how to use all those things. So anyways, without wasting much time, we're talking about the POIs. So I wanted to talk on the entry models. So our first entry model, remember, if we are in a buy scenario, yes, we are in a buy scenario, this is your first entry model. You get. So whenever you want to buy, uh, whenever you're looking to buy the market, you are looking for the market to give you this structure, to form this structure. So what does this structure mean? Okay, what does this structure mean? So this structure, in simple terms, is a very easy markup. You get, because you see it a lot, like you see it a lot in the market. You get. So it's the kind of structure where you have your breakout structure here. You have a breakout structure. The market will then come back to create inducement. That is, will come back to create what? Liquidity. And then after it creates that liquidity, it will have the breakout structure. Let me explain. Let me put it like this. So I'm going to put this here. Okay, so let's call this breakout structure. So you already know this is our breakout structure. Now the market will first of all use the demand to break structure. You get, it uses the demand to break structure, and after the first break of structure to come back down to create what? Liquidity. You get, it will induce people to start buying because they believe that what, there is demand available here. You get, it induces people to start buying. Now when those buyers come in, it will still what? Break structure. However, the best way for you to trade this structure is to wait for it to come down to the demand zone, take that liquidity, and then move. This will give you a faster trade. You get, and you get high risk to reward, very good swings. You understand? You get. So for you to understand this concept a lot more, you will have to study in depth the advanced market structure. And the advanced market structure, we did not really touch on it in depth in the free course. So technically, you know what I'm saying. In order for you to study the advanced market structure, you have to pay for the mentorship program where we do our live sessions every Saturday. And I show them this advanced market structure every weekend on the market in the charts you get. So this is our first entry model. Our second entry model is when you have this structure. Sorry. Our second entry model is when you have structure whereby none of it has broken liquidity, that is, none of it has taken liquidity, and then the market will tap into some sort of supply, come back and take all of the trend line liquidity, and then move. Yes. So this is another entry model. So you can see how each of the model applies the concept of what? Liquidity is very important. Get. So over here, what we have here is the trend line liquidity. Get. What we have here is the trend line liquidity. Then another entry model we have is when you break this into two. Well, let me just draw a diagram. So you have the market creates a low, that's inducement. Price then comes, takes that inducement, taps on any demand zone that is below the inducement, and give you the breakout structure. So when the market breaks structure, it comes here, creates liquidity, engineers liquidity just above it. Most times won't break structure, and then it will come back down into that demand zone and then leave. Okay, so this is the POI that was marked. So what you have here is a reclaimed order block. Remember what I taught you. This is a demand zone, and then over here, what are you having? A reclaimed order block, the last POI. Get a reclaimed order block. So what you'll be seeing is that the market will have what? Liquidity here, and then it had liquidity that was taken. Get it had liquidity that was taken here. Yeah, I know why I'm emphasizing on liquidity. It's very important. You get, it's very important. So guys, the next entry model you're going to be having is, let's say price was in an uptrend like this, and then it breaks this demand zone. Guys, it breaks it with what? An impulse. Note that down. I don't say it will just break it with a little candle. It breaks it with great momentum. There is an impulse, very huge candles. Then when it breaks it, most often what you would want to see is that price will first of all create liquidity, and then it will come back up to the tank. You get? So this is the POI we call what? What do we call this POI? This is the breaker block. Yes, this is the breaker block, the third POI we talked on. This is the breaker block. Now you can see that on each scenario we applied the concept of liquidity. You get, note that to validate a breaker block, for you to make sure the breaker block is going to be valid, is that it should be a valid demand or supply zone. You get, it should have inducement. You get, it should have inducement just above it. You get, it should be valid. Now when it breaks the demand zone, you should then expect that valid demand zone to be used again as what? A breaker block. However, there are two things that can happen. This can either just come up, tap on the breaker block and then move. However, it makes it more valid, stronger, when you have what? Liquidity formed just below it before it not comes back to tap into it. You get, when you have liquidity just below it before price comes back to tap into it. So I want you guys to take note of this. You can screenshot it. Screenshot is very important for you to take note of. You can screenshot this. So if we invert this to save time, let's invert this. So you can see that it is all the same scenario for the supply zone. Yes, let's say you are actually looking out for sales instead of buys. Yes, you are looking out for sales. So it is the same concept, but this time what? For a supply zone. Remember, what validates our zones? What? The presence of a first high or a first low, which is known as what? Inducement. Which is known as inducement, and inducement is a form of liquidity. You get, there are different various forms of liquidity, but like I said, we touch on advanced market structure in the mentorship program. So if you want to learn about liquidity, if you want to learn about advanced market structure, all the various forms of liquidity and the different kinds of entry model as per the advanced market structure, you will then have to join the mentorship program. However, with this entry model, you can catch very decent amount of trades and get a good win rate. Now you can go to your chart and backtest this, and then you will come back. I will be expecting your testimony in the comment section. You get, but let's now go to the chart and see what this looks like on the chart. You get, Let's see what it looks like on the chart. So over here you can see that I already have an entry. I already have a trade I'm expecting. Okay, I have a trade I'm expecting. You can see the presence of what? This is the first break of structure. Liquidity was swept, came back into that came close to demand, and then what? Induced buying. You can see the buying, but what? There was not a lot of momentum. You get now. What I'm anticipating is that price will come back down, take that liquidity, tap on my POI, and give me the massive momentum, the massive push up. You get. Let me show you similar trade on Euro USD. I have a trade like that on Euro USD where I caught a sell. You so you can see very similar, very similar. But this time, this is for the supply. You get this is a sell trade, not a buy. You can see what happened there. So we have the same thing. What? Liquidity. I'll explain why this liquidity sweep is very important in the mentorship program. You get this is another form of liquidity. So the sweep was present. We have the inducement. We had the first break of structure. We had the second break of structure. Now price came into that supply zone. You can see what happens. The moment it came to the supply zone, you had the first push down. You can see if I'm to zoom in, look at it. See there was massive inflow of sales. You massive inflows of sales. So price came back. This is where your confirmation entry comes in. So if I'm to circle this, because I want us to zoom in, let's go into the lower time frame to see what actually happened at that supply. So we're going to drop down to the 15 minutes. We are going to drop down to the 15 minutes. Now, if you look at the 15 minutes, you guys remember what I told you guys, that it should what? Change character. So you can see here, what happened? A low was broken. This isn't meant to be so. You get a low was broken and it's not meant to be so. So over here we have our change of character. So if I were to take this sell from here, this will now become what? My what? Supply zone, right? So if I'm to take this sell from here, I will not be wrong. I will not be wrong. So this would have been a confirmation entry. If I wanted to use a confirmation entry for the trade, this would have been my confirmation entry. My stop loss will be above the supply zone, and if I want to draw this to my target, you can see that I'm going to be getting a risk to reward of 1 to 9. Oh, it's not even at the target yet. I see 1 to 9. However, look at the original risk entry. It's 1 to 6. So you can see the difference. You can see the difference. So the confirmation entry helps you to know that okay, this supply zone is very valid. It's looking valid. Because there's a lot of supply, there's a lot of sales, there's a lot of traders watching this supply zone, and they want to also sell from there. Again, that's why the confirmation entry is very good. It's very good. However, like I said, the cons of using the confirmation entry is the fact that you tend to lose trades. How do I put it? Sorry, you tend to miss trades, not lose trades. So let me delete all of this. So guys, you can see the next POI. Let me do this. I want you to see what is happening here. So if I'm to drag this, you can see where I put my entry in the middle of the breakout block. So you guys remember what I said about the breakout block entry model? Let me put this to 30 minutes because I don't want it to be too wide. So you can see what I said about the breakout block entry model, whereby I said price will what? Price will what? Break a valid demand zone. So this demand zone is valid, guys. But remember what we said, that in a downtrend, demand zones tend to be weak, but doesn't make it invalid. It's not an invalid demand zone. So you see liquidity above the demand zone. If you watch, this is our liquidity just above the demand zone. We have the demand zone below. Price, you can see it had an initial little reaction to the demand zone proving that this demand zone is valid. However, because traders are seeing the supply that has just entered, the massive supply that has just entered, most traders will not want to get involved with the buys. You get, so you can see what is happening now. Price broke that demand zone, and now below the demand zone, what are you seeing that is happening? What are you seeing that is happening? Remember, I told you guys that more often you expect to see what liquidity being created. Liquidity being what created above, sorry, below the demand. That's for a breaker block entry. Now, what I'm now anticipating is for what? Price to what? Come back, take out this liquidity, tap on the breaker block, and then continue the sell to the final target. Okay, so this could be a second entry, guys. This could be a second entry. You can see how it plays out. Okay, let me show you sorry, literally the same entry model, the same entry model on GBPJPY. GBPJPY. Okay, you can see GBPJPY. Let's go GBPJPY. Okay, so you can see the same entry model on GBPJPY. So guys, this is not magic. It's not fairy tale. Yes, let me put this in simple terms. Once you see this, once you see it, you can't unsee it, my brother, my brothers. That's my brothers, my sisters, whoever you are watching this. Once you see this, you can't unsee it, guys. You can't unsee it. So you can see very similar entry. You get very similar entry. This time there was not a massive sweep. You get, however, there was a little sweep here. Yes, there was a little sweep here. There was a little sweep. Let's go to the 1 hour, because I like to use the 1 hour because things are much clearer on the 1 hour. So there's a little sweep there. We have our supply zone. Note that I'm not saying that this trade triggered. This trade didn't trigger. Honestly, it didn't trigger. It got there, but it didn't trigger. You get, because of spreads, it didn't trigger for my MT5. Yeah, so I was not in this trade. However, in I'm currently looking for a valid re-entry. However, the momentum from the supply is just too strong. It's just too strong, guys. But that is what you expect when you are trading from a valid supply zone. You get, when you are trading from a valid supply zone, you expect supply to be very powerful, and any demand that you see should be destroyed, guys. It should just be broken completely. You get, that's how valid this supply and demand strategy is. That's how valid it is. If you get your structure right, if you spot the liquidity right, get your directions right, my brother, enter the trade. Enter the trade. Because what I'm showing you guys for free here is very powerful. Then for those guys who pay for mentorship, I'm still showing them how to use order flow to determine which POIs is going to hold. Because there are some POIs that are very like, it's extremely valid. When I say valid, it's very valid. However, order flow, there's what we call order flow that shows you direction, that shows you momentum. And when you know this, you can tell if a POI is going to hold or not. You get, if it's going to hold or not. So guys, that's it for this video. Thanks for watching. See you in the next one.